Yeah. So the key factor is the fact that we have inflation, and that the Fed need to do whatever possible to get rid of
Yeah,
it.
no, look, don't get me wrong. I think headline inflation is falling reasonably sharply, right? The the nub of the problem becomes, where does it stop, right? Does it come all the way back? Do we get core metrics all the way back into the twos? Or do those core metrics get stuck around sort of 3.5 to 4? And it's looking to me that, absent weakening the labor market, that's exactly what you get. I think people just underestimate how much stimulus and how long it takes to filter through into the system, right? I mean, we chucked, between monetary and fiscal, a stimulus in the US, which is 5 times greater than anything we've ever seen in the post-war period. What the hell did we expect to happen, right? You know, and some of that stimulus is dropping away, but it takes a while. And we have the net effect at the same time that we had a bunch of people retiring from the labor market. So we were trying to, shove through all this demand with a decreasing supply. And the net result is we've stimulated nominal GDP, so real GDP plus inflation, to 10.5% above trend. That's double, and it's still there, right? It's probably coming down a little bit now. It will come down a little bit, but it's still double anything that we saw, say, at the highs of 2000 before we went into recession and the Fed was really hacking up rates, and also 2006 when they were doing the same thing. So there is a long way, Anthony, to go before we can step back and say, oh, that's it, great, party on again, right? I think markets have an unrealistic expectations. The average decline in headline inflation in a post-war recession is 1.9% off headline and 0.9 off core, and that's the median. So let's assume that we go into the recession with 6.5% headline inflation. So we got 4.5 when we come out. That's not enough. So this idea that we're going to be able to, which has been the reaction function of since the post of the GFC, that immediately we see weakness, that the fire brigade has to come along and pump more liquidity into the system, is farcical. They're going to have to keep the screws on for a long, long time, right? They have to keep the screws on. Doesn't mean you don't get slight adjustments, right? But they're pursuing this policy, which has never been tried before, because what the textbooks tell you should do, is what Paul Volcker did, right? And you take interest rates above headline inflation. Well, I mean, if we did that, Jesus, the equity market would be at 1,200, right? So, they're trying to do something by just pushing us into restrictive and then kind of holding us there for a while. But we'll see if it works.